blessed OBA, you know that a whole lot of who want desire, cause you know that I do got it. Whole lot of D on me, I walk in, I'm a showstopper. Whole lot of haircuts, a new shop, whole lot of pop-ups, a new shop, whole lot of envy and impact.
Right into it with episode 2 with the market maker with Index Queen, episode 2. Alright, so the market maker has limitations on what it can and cannot do. That's what we're going to talk about on this slide, because that's what you need to understand. What they can actually do and what they cannot do. Once you understand that, you will have a better idea of what you can do to help trade better. All right. So the market can only move in most Forex pairs 200 pips per day for Forex pairs. If you're trading in indices, it could be more points. We all know that NASDAQ US 30 can move 200 points one direction and move like 400 in another direction in the same session. So just be mindful, whatever you're trading, that it could differentiate. So again, more Forex pairs can move 200 pips a day. We're looking at about 600 pips per week on Forex pairs. A good tool you can check out is the average daily range, ADR. That can help you assess what your favorite pair is moving daily. And that's something that you might need to know, because if it already maxed out one direction, most likely there may not be any more volume in the market, and you may need to go look at your secondary pair or something like that. You may have missed a move already. So that's a good tool to have and to know about. The market maker does not have unlimited equity. Okay, so you just need to understand, first of all, what it's really about, the value of imports and exports. So the market maker can't just wake up one morning and say, oh, we're going to move 1,000 pips. Nah, it ain't going down like that, because you cannot devalue the dollar like that. There's restrictions that are placed by the World Bank that they have to abide by. So you have to understand that there are things that they cannot do. It's very limited, okay? So that's why you need to, something that you also need to take account of is notice they're open during the week at a certain price. Sometimes Sunday, at the start of the week, they're open up at a certain price. I want you guys to pay attention to this to see if this is accurate. So if you notice Sunday, it may open up at a certain price. Check for Friday to see if it closes at the same price that it opens on Sunday. If you notice that in the past, or if you're going to check it out whenever you watch this video and within the week, see what's going on, comment down in the section below to let me know if you noticed that and what pair was it, okay? So that's something that you may want to pay attention to. So they do not have unlimited equity, okay? They have to get their money back, okay? They have to get their money back. They can move up throughout the course, if it's US 30, all these points. Believe me, they're going to get their money back. That's where you're going to see that the retracement against the trend comes into play, those reversals. We got to get our money back. Just like a bank. I lend, I give you, you take. I'm going to need that shit back. Period. That's how the market is. They're going to need that, run that money back. So that's when you see supply and demand, and you see that your reversal patterns are being set. That is what's going on. That's why you get a retracement against the trend. Okay, there's also limited by weekly net change allowance. So there are limits to what can happen for the week. So think about it. Use your brain. Understand the objectives and the limitations that they have. Because once you understand that, you're going to have an edge on the market maker, and you're going to see results in your trading. We're going to talk about 3 important tips that are very essential to me when it comes to trading and being consistently profitable. Patterns in the candlestick. I keep telling y'all this. There is money in the candles. I need you to read the Candlestick Bible if you have not yet. I need you to get on an app. I need you to recognize what is going on when you see these candlesticks printing. There is timing sometimes to it. Timing has a lot to do. I call it time mapping. Okay? You need to pay attention to what is being printed at a certain time. Go ahead, take some time out, watch your pair. You can spend one day, it's not going to hurt your ass, to spend one day to watch the market and pay attention to certain things that are being printed in certain times. I'm guaranteed over a course, especially if you do it for a week, you're going to start recognizing these timestamps. And please don't look at the timestamps at the bottom of your phone or TradingView. I hope we all know that. That is their server times, not yours. Hope we know that. So, other things that they can do is hit your stops up and down. We know that. That's how your ass gets stopped out of most of your positions because you got your stop too close. But yes, they can hit your stops up and down. They can reverse off the high and low of intraday trend change. Okay? You need to understand that. That happens a lot, actually. Reverses on the high and lows, you see it happen all the time. It happens a lot. Straight drops and rises, that is finishing the move. That's also finishing. The reason why that happens, straight drops and rise, because they're trying to get people in margin trouble. That's why you get that. Straight drops, straight rise. That is infamous in Bitcoin. Okay? We all know that Bitcoin would drop on your ass real quick, and have you. I honestly, like my first year of trading, I remember being in a buy for Bitcoin. I was up at least $2,000, and there was a take profit that I had in mind. Surprisingly, at that time of my trading career, I had a take profit in mind. Thing is, greed set in, and I was like, oh, if it go up just a little bit more, I'm gonna take it right here. You know what it did? It dropped in seconds so fast I couldn't even take no profit. Mind you, that's another thing. I didn't even have stop losses in profit to protect my funds. Rookie moves. I've grown so much. Just straight rookie moves. But that had happened in Bitcoin. It did a straight drop. I was in margin trouble. Luckily, I didn't blow my account. So you need to understand what these straight drops and rises are trying to do to induce traders and also to get you in margin trouble. Induce traders to go into the wrong position and jam you up, and ones who were currently in the right position and not protecting their account because you decided to move your stop loss. Timing and testing the trader's patience. Those are for traders who are jammed up, who think that their entry is going to be released. The market maker does not release traders. Its job is to get your money, to pocket your money. So sometimes it will not release traders they're in the wrong position. It will keep going the wrong way on you. Find your ass in serious trouble. That's what's going to happen. And it's going to test your patience to the point where you're like, oh my God, I need to go ahead. I need to take this L, which you should do. Don't let it get too bad. Again, have a trading plan. Know what you're willing to lose in the market. But I have said, oh, okay, I'm only going to risk this much. And it happened. I pulled out. I reset. I said, okay, obviously I was in the wrong direction. And possibly I wasn't in the wrong direction. It's just that I got in too early, right? So I said, okay, let's regroup. Okay, I feel like my analysis is correct, but I need to go to a more appropriate level that is going to retest it. So what do? I wait till I get to that level. I execute again. Guess what? I made my money and got it back. There's been times that I broke even as well. But at the end of the day, take the L. All right. So we talked about stop hunts. We talked about what the market maker can do. So we're going to look at some examples right here on this chart. I'm sorry that my cursor is not working, so I tried to label this so you can follow along to my words to the best of your ability. So on the left, we have the pink box that it was consolidating. We saw that it was a stop hunt to the high. We already talked about spikes in the previous episode. Again, if you haven't checked out that episode, you may need to stop where we're at right now. Go watch episode 1 so you can see why we're talking about this in episode 2. Again, if you're feeling also this content, like, comment, and subscribe. Share it. Gotta stop hunt. We talked about the spikes, right? If it spiked up to the high, what we're gonna do? We're gonna take a sell. So we got 3 levels. It pushed down, started to form a W formation. Okay, so we see that a low has been set. Exactly, if you go across to the big long pink box where it start consolidating at, that is the low that is being set. So we have a consolidation. So if you took the entry at the bottom of the W formation, or if you're a breakout trader, you caught the little breakout, you did catch some little pips, right? You caught some pips on the breakout. It starts consolidating. It gets away from the zone. It breaks out of the zone. Now we have another stop hunt. Look at the pin bars. We got 2 pin bars that was, we have 1 pin bar that was set, excuse me. We have 1 pin bar that was set, which was a stop hunt. Look at the wick. Look at the wick. So you probably got stopped out. I probably was in right here myself, got into the W formation. Possibly took partials at the retest up here where it started consolidating at, and it kind of broke away a little bit. Probably got my runner hit because we did have another stop hunt. Most likely this is another buy level or the true entry. So I probably end up getting back in because I just have my levels marked up. And then also if I see a spike to the low, I am taking a buy, and that's what happened. And as you see, it bought all the way up back to the price point of where it dropped at. All right, so when you're in the market, you don't want to get caught up in the moment, okay? Do not get caught up in the moment. So you want to look at the bigger picture, okay? You want to go to the daily. You want to go to the 4-hour and the hour. You want to do your top-down analysis. It's very important for that. Look at the bigger picture. I know for me personally, I pay attention to the hour. I found my entry on the M15, M5. Now, once I'm in a position, I will look at the bigger picture to see where we're headed. I will go back to the hour. I will look at the 4-hour chart to see where we're headed, where the zone is at. Okay, I did that today. When I took the sell, I did look at the bigger picture, and I was confident in my sell, and it did play out for me. All right, so you don't want to get caught up in aggressive moves at all. Don't get jammed up. Like I said, I keep telling y'all that. Don't get jammed up. When y'all in the market, be like Courtney said, Index Queen said, do not get jammed up. A midweek reversal that coincides with intraday reversals. There is a midweek reversal. We all say midweek reversal is on Mondays. I know I need my ass whooped for saying that. Not Mondays, Wednesdays. Sometimes it's on a Thursday, okay? It's not always on a Wednesday. Sometimes it can fall on a Thursday. But understand those reversals can happen, okay? Okay, supply and demand. Lastly but not least, you will see mostly M's and W's printing. I see them all the time, okay? I see them being printed. Those are my trade setups. That is one of my trade setups, catching the M's and catching the W's. I mean, it's really just that simple. It's really just that simple, to be honest. Once you understand the objectives, I really don't see how you can go wrong. All right. So every day during the initial market hours, the market maker will set a high and a low. Pay attention to that. Then the candles can print in a range, consolidation, which we've seen on the previous markup, where traders will build positions. It's going to get contracts in because why it's trying to jam you up. We already understand the objectives of the market maker. Let's not act like we don't know what's going on. But to order to beat that, we're not going to play the game. So we're not going to play in the range. We're not going to be like the retail traders. We're not going to do that. We're going to stick to the high and the low. Or you breakout traders, y'all going to wait for the breakout and you have your confirmation. They're going to widen the swings. That's another thing, okay? At certain time frames, this can happen. You need to pay attention to when these swings are happening. So do yourself a favor. Do not play in structure. Sit on your hands and wait for your position, because we already talked about you having things marked up, having a top-down analysis, knowing when you go to the market where your trades are, what you can do to set that so you don't get distracted. Like I told you, I have my lines. I don't see price there yet. I'm not getting in. I'm gonna wait. At the start of a session, they will correct or rise against the move of the day. Y'all, if I can't tell you how important this is, at the start of the session, it will correct or rise against the move of the day. So let's talk about it. Today, US 30, today is April 14th. I traded New York session. All right, if you was trading US 30, you know what I'm talking about. So in Discord, I put that the analysis was that US 30 will continue to sell after a retest. So me having the knowledge that I have and me knowing what's going on, because I know at the start of a session, it will correct or rise against the trend of the day, against the move of the day, right? The move of the day was my sell, but I said it will sell after retest because I knew it was going to correct. I knew it was going to rise. And guess what? Baby, it did that. Now, what it did do that I wasn't expected was I had a certain point that it was going to rise to. It surpassed that, right? It actually did a huge pump and a huge spike. Again, what do we do when we get a spike to the high? We sell. And that's what happened. Okay, so if you got into that sell after the spike, you was winning. Okay, but because of the knowledge that I have, I knew that it was going to rise. I might have not missed my analysis as far as how far I was going to go. I did get into the sell at the second retest. So I didn't catch my sniper entry, but I caught the sniper entry on the second retest. And my entry wasn't even being played with when it decided to start ranging and introducing traders, because that's what happened. Y'all already know who y'all are. If y'all on this video, you guys were in US 30 buys, and that wasn't it, bruh. It wasn't. That was to introduce. That was manipulation. The sale was valid. You might have caught a couple of pips, but yeah, I remember that entry set at the low of the buy got stopped out like 5 times, because I also took the scalp, because I held my sell and I took the buy scalp, but I got out like at 20 pips because I was like, nah, I know this is not valid, so I'm not about to play around. So I went on and took profit, and as soon as I took profit, ended up going back to the low that was set at the buy. It got smacked out like 5 times. Like, hell no. I ain't got time. Y'all also need to put that on y'all trading plan. You get smacked out that many times, like, that's obviously not the move. Your stop loss getting hit that many times, I would go ahead and call it, and I will wait for another setup. So don't be entering in 5-6 times. You're gonna find, again, getting jammed up. Alright, so we're gonna take a look at what I'm talking about as far as stop hunts and things like that. This is an example of exactly what I'm talking about. All right, so again, I apologize for my cursor not working. That's why I tried to label the template as best as I could. So in the blue box, we're starting off with Asian session. Okay, it's very important that you know that when you're looking at Asian session, it's gonna probably do like a 50 pip or less move. So where I labeled it at, that would be 50 pips, and it will be 25. So it ended up breaking below the zone, right? We ended up breaking below the zone at Asian into the night. Look what happened at the low that was set at London. There was a hammer formation, a spike to the low. Most likely, I would have took that buy, right? I'm definitely seeing a wick to the low. That lets me know, that spike lets me know that I need to get into a buy. That's confirmation for me. I have other confirmations as well, but just looking at the candles, naked trading, we see there's a spike to the low, right? So this could be a valid buy. But then we start getting consolidation right here. We also get another retest. We got another retest exactly at the same level, right? So if you had your stop too close, you would have got stopped out. That's why when it comes to those levels, 9 times out of 10, I am putting my stop. If it's not in profit, sometimes I do put it in profit and get stopped out, and I'm in the right direction. But if I'm at a low and that's my solid buy zone, I'm putting my stop loss below that zone. So had you put it below that zone, where you see that I put the pink box where it says index queen, if you would have put your stop loss right there at the bottom of that pink line, you would have been good. And that's where you want to have it. You want to have it below that level. Then you know if it breaks structure, if it breaks that support, most likely we're in the wrong position. Okay? So it ended up retesting exactly that price point. And guess what? We got a big buy candle, a beautiful candle. So if you're a breakout trader, I showed where you probably would have taken the breakout. If you're me, we would have got that sniper entry, period. You already know. We would have caught that. So make sure that you realize the appropriate stop loss is below. It should be placed below the low of the day. You would have had no problem. You would have been good. The position would have bought up. At that point, you want to move your stop loss into profit and you want to trail it. So that's just an example of what is going on. How the market can be very manipulative. But like I told you, these candles, y'all gotta read y'all candlestick Bibles. And I keep saying the same thing. Y'all need to write this. Y'all need to have this in bold. Biggest day. Biggest day. If you don't write this down, we're gonna have issues. Write it down. Write it down. There is money in the candlesticks. Look at the hammer. Look at the hammer. Look what happened to the hammer. Look at all that money for the buy in the hammer. There is money in the candles. You have to pay attention. You have to know what your candlesticks mean. We're going to talk about the cycle in the market because there is an ongoing cycle and it's not going to change. It's a revolving thing. It happens every day in the market. The cycle is based on traders' human psychology. Y'all should know that. The cycle is in the mindset. Is in the mindset. They already know that y'all be coming to the market messed up in some more. They know that. That's how they make their money 90% of the time, because y'all be coming to the market with the messed up mindset. You got to check yourself at the market. If you don't feel like trading, it's happened to me one time. I did not feel like trading. And I caught a solid move, but then I did like something really crazy. I did a rookie move and, I lost some bread. But really, honestly, I didn't even feel like trading, so I should have never been in the market. I honestly was like, dang, I'm just not up for it today. I should have took heed to that and was like, you know what? I'm just going to call it off. I'm not feeling it. If things are personally going on in your life, do not get in the market. Believe me, I done taken a month off from trading. I done taken 2 weeks and came back and killed it first day on. You're not missing anything, okay? If you need that time, take the time. It's not going to hurt you. You're going to be protecting your account, because the worst thing you can do is get in the market when you know you're not feeling right and you blow your account or you get jammed up in some position. Why? Stop it. We already know the objectives. Don't fall for the gimmicks that the market maker is trying to do. Don't do it. Understand, fear, greed, and inexperience are used to prey upon the weak traders. Fear and greed. Ongoing things all the time. Fear and greed. How many times y'all either didn't make the money y'all was supposed to make, or y'all was being greedy and blew your account? I read today in Discord, somebody said they blew their account because they over leveraged. Fear and greed. Fear. Either fear to take a shot or you doing the most. Why? You don't need to do that. Risk to reward. Take the appropriate lot size for your account so you can be consistently profitable. So newbies that don't know anything, fear that they're missing something, and greed, maximizing your gains of the market maker. They know this. Fear and greed. newbies who come in the market that ain't watched my video. They don't know the objectives of the market maker. They just going in naked with no background check. Yeah. Yeah, I'm talking to you, Christopher. No, I'm just kidding. I don't know if it's a Chris watching my video. If there's a Chris watching my video, comment below. Yeah, y'all, personal life. Let's really talk about it, right? Y'all just going in the market, not even knowing what's really going on. What you doing? You don't even know. You just doing whatever. You just clicking the button and some more. Like, don't even know what's going on. More shit. Listen, that's gonna stop today. Stop it. I'm not sitting here recording these videos for you to do the same stuff. Like, no, it stops today. The trap moves are there to gain your hard-earned equity. If you've been profitable, please withdraw your money. Don't get greedy in life. Honestly, to me, you need to have on your trading plan certain lot sizes for certain plays. For your high percentage trades, if you know how to trade, for your high percentage trade, you could probably do a 2% risk, right? You could probably do that. On your, this is a possible setup, or maybe I didn't get the best entry, but I'm going to catch the retest. Go in with, half that lot size, okay? Since you didn't get in that entry and you're doing the retest, just in case. So, we're still talking about cycles, all right? So, once you understand the structure of the market, there will be only 2 to 4 trades that you should be taking in order to be profitable. 2 to 4 setups. That's all you need. The setups are 90% accurate if you know what you're doing, if you are taking your high percentage trade. Yes, I probably shouldn't be saying that. I shouldn't be like, oh, if you take these setups, you're going to be 90%. But for real, when I follow my trading plan, bro, I'm not losing when I follow my trading plan. And my trading plan consists of me taking my high percentage trades. Know what your high percentage trades are, because you did market watching. You did sit on your hands. You did watch the behaviors of your pairs, stuff that we learned in episode 1. You did that, and you're getting more insight, and you're learning more of what's really going on. So once you get to that, you can start, you're seeing that, dang, every time I hit my setups and I wait and I'm sitting on my hands and I'm hitting that high percentage trades, look at the results I'm getting, right? So again, mastering these setups will ensure success and produce returns and profits. You're going to be winning, period. So we're at the end of the video, and I always love to give y'all gems. All the episodes gonna be gems, but I like some take homes that you can take with you that may not be necessarily pertaining to what we covered, but just things that you really need to take heed to. When traders lose money, usually they take the day off to reevaluate their decisions. That's what you should be doing. The market maker knows this. Okay? Again, we're talking about cycles here. It's an ongoing cycle. Every day, it's a cycle with them. They already know, oh, we about to catch the people we about to catch the newbies. We about to get them jammed up. We about to get the people who's in fear they're going to miss the move that's getting jammed up because they just got into some shit. And we're going to take the people that are greedy, who just want to see the money. They over leveraging. We're going to get them too. This is a cycle that happens every day. It does not stop. Why you want to be a part of that? We're going to stop doing that. So the cycle continues to introduce more positions. We know this. We learned this in episode 1. We know the objectives. We already know what's going on. So why are we still trading like we don't? You got the information. I didn't gave it to you. So why you still handling your account like that? Another thing you need to take home is the market will not move in one direction more than 3 days in a row. The market will not move in the same direction 3 days in a row. It is a cycle. They had their objectives. We went over their objectives. So what are you going to do with your objectives that's on your trading plan? What are you going to do with it? You going to follow it, or are you going to do what they want you to do? Are you going to do what they want you to do that's a part of their plan? Or are you going to rock with your plan? Pick a side. But I want to thank you guys for tuning in for episode 2. It's been my pleasure to deliver this content. I'm excited about these series. I'm excited about the progression of it because we slowly starting to get there, tapping in more and more things. If you enjoyed episode 1, episode 2, please click that like button, subscribe to my channel, share this content. A great day. I will see you on episode 3. Peace, my loves.